Welcome back to the session once again. It's your boy Walker FX, and it's been a while. We dropped a video for you guys. So today I've decided to drop an amazing and an educative video, on how to analyze the market using top-down analysis. It's gonna help, every trader out there. As you being a beginner, an advanced trader, or intermediate trader, this video will help you to know how to analyze the market using top-down analysis. When we talk about top-down analysis, it means starting from the higher time frame, scaling down to the lower time frame, and finding your entries at the end of the day, because that's the goal, to find an entry, right, on how to enter the market. So I think this video is going to help you on how to do all these, so that next time when you open your chart, you will know how to analyze the market starting from the higher time frame to the lower time frame, and at the end of the day finding your entry and securing some profit. So let's quickly jump into the video. I don't want to make this video long, so let's quickly start. So this is Euro USD. So like I said, we'll be using top-down analysis. So what are we going to do? We are going to start from the monthly time frame. Top-down analysis simply means starting from higher time frame to the lower time frame. So we're going to be using the monthly time frame. We're going to start from the monthly time frame. So this is the monthly time frame, and as we all know, this month of June, we've just gone like 1 week of June, right? So we are going to include last month in this our analysis. So this is the monthly time frame. So we can see these two candles represent these 2 months. Like this candle represent May, this candle represents May, and this candle represents June, right? So what are we going to do? We are going to mark the high of the May candle and the low of the May candle, right, over here. And we are also going to mark the high of the June candle. We've just gone like 1 week. We've just completed 1 week of the June, so that's why I included last month on, right? So we are going to mark the lowest point of June. So like you can see, we've marked the highest point of May and the lowest point of May, and we've also marked the highest point of June and the lowest point of June, right? So as a beginner, this is what you want to do when you want to start from doing your top-down analysis. You want to mark the top or the lower, or the top, the highest point of the market and the lowest point of the market within the same month, right? So this is what we've done over here. We are analyzing 2 months, because this month we've not really done anything. We've just completed 1 week. That's why we included last month, right? So we've already we've already marked the highest point and the lowest point of the both months, and we can see these 2 months are also bearish. All these candles are bearish candles. This one, so we've had a first indication that we'll be expecting some sales, or we'll be expecting sell movements, right? We don't want to trade against the market. Last month we had a bearish candle, and this month we are also having a bearish candle, right? But we are not there yet, so let's continue. So as we are done marking our highest point and the lowest point of the both market, the month, let's go to the weekly time frame. So this is what the chart looks on the weekly time frame. So these are the points we've marked over there. These are the points we marked over there on the monthly time frame. So this is how it looks on the weekly time frame. Let's not focus on this side. Let's just focus on this side. Let's just focus on this side, because these moves are very big moves. you just see, you can I know we can see like 6 candles. 6 candles represent 6 weeks. We are on the weekly time frame, right? So 6 candles represent 6 weeks, so which means this is a very big move. So you don't want to focus on this backside, we just want to focus on the current price action, right? So what is the weekly, what is the weekly chart doing? The weekly chart is also giving us a bearish movement, because we can see a lower high over here. Price created a lower low, gave us a lower high, and has given us a lower low. So on the weekly time frame, it's also giving us a bearish structure, right? And on the monthly time frame, we notice that all the 2 candles are also bearish candles. So I just want you to understand something, understand the current, or understand the direction of the market. So the weekly and the monthly are giving the same direction, which is bearish direction, because we are creating higher highs, lower lows and lower highs, lower highs and lower lows, right? Yeah, so we've had an indication of the direction of the market, right? So what do you want to do? We don't want to do anything over here, we just want to know the direction of the market on the weekly time frame, right? So on the weekly time frame, we can still see price creating lower lows, right, which means we are still bearish. Don't focus on this previous movement, let's focus on what's happening over here in this range. Let's focus on what's happening in this range. Yeah, we don't want to focus anywhere here. You want to focus on what's happening in this range. You get what I mean? In this range. So let's go to the daily time frame. So this is the range. So the daily time frame is giving us a clear structure, a clear bearish structure. The daily time frame is giving us a clear bearish structure. Why is it bearish? Because we can see a higher low over here, a lower high over here. We can see a lower low, a lower high, a lower low, a lower high, a lower low, and now price is giving us a lower high, right? Price is giving us a lower high. The reason why top-down analysis is very, very good, because when you start from the monthly time frame, it's giving you a clear picture of what the market is doing. It's giving you a very clear picture, direction of the market. It's giving you a direction of the market. You're gonna see the direction of the market, looking at a bigger picture. So even from the monthly and the weekly, we've already known that price is in a bearish movement, right? And the last thing you want to do is to go to the previous chart and look at what's going, because those things are not important. We are always focused on current price action, right? So the weekly, daily and monthly is giving us bearish movement, because we don't want to see like the weekly is giving us bullish and the daily is giving us bearish. That's not what we want to see. So now we can see that daily, weekly, monthly is giving us bearish movement. And why is it giving us bearish movement? We are creating higher lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And now we can see that price is at the edge of a lower high, right? A lower high. So if we see a lower high, what do you want to see next? You want to see a lower low, right? Same like this. If you see a lower high here, if you see a lower high over here, what are we expecting? We are expecting a lower low. Anytime we see a lower high over here, what are we expecting? We are expecting a lower low. So now we are in a lower high phase. So what do we expect? It's either price is going to like push a bit higher, because probably maybe the lower high hasn't ended, maybe push a bit lower. So far as this this high hasn't been broken, we are still bearish, right? So it doesn't matter, price can push lower over here or go a bit up to respect this supply zone and push a bit lower. All I want you to understand is, I want you to understand the movement or the direction of the market, right? Yeah, so this is the direction of the market. And you can also draw our trend line over here. You can see the price is in a bearish trend. Everything shows the price is in what? A bearish trend. Like everything shows price is in a bearish trend, right? Price is in a bearish movement, right? So you've had an indication, bias and everything over here, right? So what are we expecting? Let's clear everything. Like, I just want to explain it, you know, to a beginner, for them to understand what's going on. You don't need, you know, a lot of things to become, you know, a profitable trader. All you need is, you know, price action. Don't complicate anything. So now we've had an indication that price is in a downtrend on the daily time frame. So on the daily time frame, what do we want to do? So for now, we can clear all these trend lines, because we don't want our trend lines to be a lot on the market, right? So on the daily time frame, we want to mark our, because we are bearish, right? So we are looking for what? Sales. So you don't want to trade against the trend. Like I always tell you, you have to first, as a trader, when you go on a chart, you have to first identify the trend of the market. If you identify the trend of the market and now you know the trend of the market, either being bearish or bullish, if it's bullish, you always look for buys. If it's bearish, you look for sales. So now we've identified the trend of the market already, and now we know that, you know, market is bearish, right? So what are we looking for? We're looking for sell opportunities. So what are we going to do? We are going to mark our supply or resistance zones. So we can mark this level as our resistance zone. We can mark this level as our resistance zone, right? And this level is the support, the previous support that broke, that price broke, right? Because this was our previous support. Why was it our previous support? Because we can see a lot of rejections over here. Price got here rejected, price got here rejected, same thing happening over here. So this was a support level that got broken to the downside, right? So we marked our resistance, we marked the support that got broken, and now we can see the price is reacting to this support that got broken. And as I always tell you, support levels would later become a resistance, and a resistance level will also later become a support level, right? So now we are seeing a reaction on this support level that got broken, right, to the downside. You know, price retraced and now it's reacting to this support level that got broken to the downside. So depending on your strategy, we have a lot of strategies in the market. We have support and resistance, we have supply and demand, we have a lot of strategies, fair value gaps, because a lot of things are happening over here. One, let's go to support and resistance. If you want to trade support and resistance, this is a very clear, like, break and retest strategy, because the support has been broken to the downside, market has come back to retest this support level. So now you'll be looking for what? Your sell opportunity on the resistance. So this now is a resistance zone. This zone is now a resistance zone. It's no longer a support zone anymore, it's a resistance zone, right? So that's the support and resistance strategy. If you're looking for, if you trade supply and demand, since we got this impulsive move to the downside, this big red candle, we are on the daily time frame, so you have to know that this big candle is very, very big. It's an impulsive move, right? So what do you want to do? You want to mark the high and the low of the last green candle that caused this impulsive movement, right? This is also, I'm teaching you a lot of strategies. I've already taught you how to find the entry using the supply and using the support and resistance, right? And now I'm teaching you how to find the entry using supply and demand, depending on the strategy you use. So we've marked the top and the low of the green candle that caused the before the impulsive move happened. So what do you want to do as a support supply and demand trader? You want to wait for price to come and tap in this zone and look for your sell, right? If you are a support and resistance trader, price is already at your support level that has later, or that is now that has now turned to a resistance. So if you are a support and resistance trader, what do you want to do? You want to look for confirmation and enter for sales, right? Depends on the kind of strategy you use. If you're a fair value gap trader, price is already in a fair value gap zone. What is a fair value gap, or how do you mark fair value gaps? You mark 3 candles, or 3, when you are looking for sales, you mark 3 bearish candles or any kind of bearish movement candles. So this is the first candle, this is the second candle, and this is the third candle, right? So you look for a gap. This third candle and the first candle, they don't have to meet. So now we can see that this first candle and the third candle, they have not met, right? So this gap in between, this imbalance, is a fair value gap, right? This gap between that imbalance is a fair value gap, right? Is a fair value gap. Now we can see that price is also in the fair value gap. So like I said, depending on your strategy, if you are support and resistance trader, you know how to find entry over here. If you are supply and demand trader, you know how to find entry over here. And if you're a fair value gap trader, you know how to find your entry over here, right? So since I trade supply and demand, everybody that knows me knows that I trade supply and demand, right? Using 1 or 2 confluences, and I find my entry. So now we don't want to trade over here because we feel like it's too early. Price might want to push a bit higher to this zone before, you know, experiencing any kind of sell movement. So we don't want to quickly rush into the market because we have seen that this support that got broken has now become a resistance, and now we are seeing that price is respecting this, reacting to this new resistance zone, and has given us some kind of bearish movement. So we want to quickly jump into the trade and take our sell positions. No, we don't want to do that, right? Since the strategy I trade doesn't teach me to do that, so I don't want to do that. I want to wait and scale lower because the daily, I've already marked my daily supply zone, right? I'm a support and resist, I'm a supply and demand trader, so I've marked my supply zone, which is the top and bottom of the green candle that caused this impulsive red movement or the sell movement, right? So now I can see the price is retracing back to the supply zone. Then I can take my sell position from there. But we don't want to take our entry on the daily time frame. What do we want to do? We want to go lower to the 4-hour time frame. Let me delete this zone. I only created this zone because I didn't want us to focus on the previous zones. We only wanted current price action, right? So let me just delete this zone for everything to be clear, right? So now we can see, because I trade supply and demand, and I have a lot of confluences that I look out for before entering the market. If you are part of my mentorship, you will know what I'm talking about. One of the confluence, I want to see a consolidation market. Here we could see that price consolidated a lot before this impulsive move happened, right? So first, I've seen one confluence. This is the consolidation that pushed the price downwards, right? 2, I want to see if it's a sell, I want to see a green candle before a big movement. So this is the green candle before this impulsive movement, right? So we've seen we've had our second confluence, and the third confluence, I want to see market breaking structure, because like you can see, price was reacting to this support, and we later broke structure. We later broke the support level to the downside. So we had a break of structure to the downside, and now price is retracing to this supply zone for us to take our sell. So when we started from the monthly time frame, we've been having a lot of confirmations that shows that price is still bearish, right? We've not had any confirmation that's giving us price is bullish. Every confirmation or all the analysis we've been doing shows that price is bearish, right? So what do we want to do? Like I said, I don't want to take any entry on the daily time frame because it's too early, or I don't want to take entries on the higher time frame. So I want to go to the 4-hour time frame to find, you know, inner entries or internal entries, internal structures, to get a sniper entry. Like you can see, this is the 4-hour time frame. So if you wanted to be like, okay, on the daily time frame, price is now at the resistance zone and it's giving us some kind of bearish structure. When you go to the 4-hour time frame, you can see that this zone hasn't price is not even at this zone where we want to take our entry. So taking sell positions over here is too early. I'm not saying it's not possible, it's very, very possible. If price sells from here, it really makes sense, because this support has become a resistance zone and price is reacting. So if sales happens over here, it really makes sense. It's 100% valid, right? But you always have to focus or follow your strategy. So our strategy is supply and demand. So we don't want to sell on this break and retest. We want to sell on this supply zone, right? We want to sell on this supply zone. So I marked my supply zone on the daily time frame. You can also mark your supply zone on the 4-hour time frame. This is the last green candle that caused this big impulsive move to the downside. So you can also mark your supply zone on the 4-hour time frame to get impulsive, or to get what to get sniper entries, right? So what are we looking out for on the 4-hour time frame? The 4-hour time frame is giving us a very, 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 very clear structure. A very, very clear structure. This was the consolidation that happened. This was the consolidation that happened. This was the consolidation that happened. Price was failing to break the high and the low, and finally price broke this support to the downside, and now it's reacting, coming to this supply zone. Then we expect a big drop when price gets to the supply zone, right? This is a very, very, very clear structure, right? So we don't want to rush this trade. We just want to take our time for price to come to that zone before we take our sell positions, right? So this is the 4-hour time frame. We've marked the last bearish candle that caused the impulsive move, right? So on the 4-hour time frame, we've already marked what's happening, right? So we want to scale lower to the weekly to the 1-hour time frame. The reason why I told you, because you can see on the 1-hour time frame, is price hasn't even gotten to where you want to enter, right? So, and I told you, if market sells from where it's currently at, it makes sense, because one, it's already at the resistance zone, right? The previous support that is now reacting or acting like a resistance, price is there already, and it has given us a bearish candle on the weekly time frame, which means sellers are stepping in the market. So if price sells from there, it makes sense, right? So we want to go lower to see a lot of confirmations. So when we went to the lower time frame, which is 1-hour time frame, we can see some consolidation happening over here, right? So we can mark other consolidation that's happening over here. That consolidation that's happening over here. So price can break this consolidation and start selling, or if it doesn't break this on consolidation to the downside, it can break to the upside, give us some kind of retest on this resistance to our supply zone before we see any kind of big movement, right? Before we see any kind of big movement to the downside. So this is how we analyze using price, using top-down analysis. You want to start with the monthly time frame to the lower time frame, right? So like, this is like my overall expectation on the market. So as a day trader or a scalper, if you want to take any position over here, because maybe you cannot wait, or you don't have the patience to wait for the price to come in your zone, but you want to take a position over here, if you see price breaking this consolidation, you want to take sales, right? If you see price breaking this consolidation to the upside, you want to take buys. It's also fine, because the goal is to make money, right? So what do you want to do? That's why I want to scale lower, so that I can find any immediate entry to either sell or buy to our zones, right? So this is the 1-hour time frame. We've seen that on the 1-hour time frame, price is consolidating, failing to break this low and failing to break this high. So what do we want to do? We've marked the consolidation that's happening right now, and we want to scale to the 30 minutes time frame it's still doing the same thing. 30 minutes is still doing the same thing. So now we are not even having any clear movement. 30 minutes, 15 minutes, 1 hour is doing the same thing. So what do we want to do, or what do we want to wait? For now, we have to wait because we don't want to trade in consolidation zones. We want to wait for price to see any kind of, you know, break of structure to the downside, a retest, and price coming to this zone. Because when you look on your left, you can see that there are zones price can still go to. We have first zone over here. We want price to come here so that we take our sales, right? We have second zone over here, down to the downside over here, that price can possibly come to before deciding to buy, right? Because this is a support zone. So we want to see something like that happening, either price breaking to the downside and coming to this support or demand zone, or we want to see price breaking to the upside, retest, and coming to this supply zone. So this is basically my outlook, even though I understand I'm analyzing, or I'm teaching you how to analyze the market from top-down analysis. But if you are somebody who trades Euro USD, I've already done your weekly analysis for you. So this is what I'm expecting on Euro USD. For now, price is consolidating. We want to see break of structure to the either to the downside or the upside, because if price breaks to the downside, it makes sense. The zone here price needs to come to fail to either continue pushing up or lower. If price breaks here, then we go a bit, like go more lower. And there's also zone to the upside over here. Price needs to, you know, go right. So now all we need to do is wait on Euro USD to see any kind of break of structure to the upside or the downside. You understand? So I've basically analyzed USD for you, and let's quickly analyze gold, because we trade gold. So let's quickly analyze gold. Same thing is happening. Like if you are an experienced trader, you can see that Euro USD, gold, silver, they do the same thing. They are doing the same thing. If you realized, Euro USD has some kind of structure like this, the downside here, and also has something like this, right? Also have something like this, right? Euro USD have something like this, same like this. Let's go to Euro USD so that you can see. Euro USD has the same thing like gold. Let's go to silver. This is silver. Silver also have the same thing here, and also has here also, right? And we are currently in consolidation market. Euro USD has something like this. Gold has the same thing like this. Gold has the same thing like this, right? Silver has the same thing like this. So if you trade Euro USD, whatever Euro USD will do, that's the same thing gold will do, right? We notice that gold had this big sales to the upside. When we go to Euro USD, the same thing. We had this big sell, this big buy to the upside. Price is consolidating. If you go to silver, if you go to this silver, you can see that price also had this big impulsive move to the downside. It's consolidating. So like you can see, the same way I analyze for Euro USD, that's the same thing that will happen on gold. Whatever happens on Euro USD will happen, same thing will happen on gold. So now this is Euro USD. We are expecting either a break to the downside to come to and retest this demand zone, or a break to the upside to retest this supply zone. Same thing is happening on gold. Now we are expecting gold to either break to the downside to retest this demand zone for any buy movement, or to the upside to retest this supply zone and continue pushing lower. That's the same thing that's happening, basically the same thing that's happening. And in order for this to happen, in order for that to happen, we have to go and see what is happening on DXY, right? So this is the same consolidation that's happening on gold, Euro USD, and silver. So whatever happens on DXY is going to determine what's going to happen on either gold USD or gold euro USD and silver. So on DXY we also have this supply zone up here, and we have this demand zone up here, right? So if DXY breaks to the upside here and give us something like this, what are you expecting on gold? Gold will break to the downside. Gold will break to the downside and go to that demand zone we are talking about. If DXY breaks to the downside like this and give us something like this, what will happen on gold? Gold will break to the upside to that supply zone we are talking about. So trading is just simple. You just have to know what you are doing, have the knowledge and know what you are doing. What I'll advise you, you have to first analyze DXY, right? Analyze DXY, know what DXY is doing. Now DXY has given us two zones. We have supply zone over here, we have demand zone over there downside. That's the same thing gold and most of the currencies are doing. USD has two zones, to the upside, to the downside. Gold has two zones now. Price wants to go either to the downside or to the upside. Silver has two zones. Same thing is happening like all the time. So you just have to, that's why you have to be consistent in the market to know what's happening. Even if I'm sleeping and you wake me up, I know what's happening on gold. I know where gold is currently at. I know where DXY is. I know that DXY is consolidating, gold is consolidating, USD is consolidating on a 1 hour time frame. I know everything because I'm consistent, right? I'm consistent and I know what's happening over there. So even if you don't have a trading capital, you have to be consistent on the market to follow the market, know what the market is doing every day, right? Yeah, consistency is the key, right? So this is basically how to analyze the market using top-down analysis, you know, and comparing one or two currency pairs together and finding entries. This is basically simple. You start from the daily monthly time frame. You mark your monthly high and your monthly low. You go to the weekly time frame. If you haven't seen any kind of, I think when you scale lower to the weekly time frame, at least you will see, you have an idea of the direction of the market. You mark your weekly high or your weekly low. You go to the daily time frame. On the daily time frame, you are going to see your direction of the market. You are going to see the direction of the market on the daily time frame. So on the daily time frame, it's either you mark your support and resistance, your demand and supply zones. You go to the 4 hour time frame. If you want to mark your support and resistance, it depends on you, but for me on the daily time frame, I mark my support and resistance, my daily low, my daily high, support and resistance zones. I go to the 4 hour time frame. That's where I mark my supply and demand zones. You have to note support and resistance is different from supply and demand, right? That thing is also a different topic at the same time. If you are in my mentorship, you know what I'm talking about. You go to the 4 hour time frame, you mark your supply and demand zones. You go to the 1 hour time frame, you mark your zones, you see where price is currently at. You know, you do a whole lot of things over there. And you go to the 15 minutes time frame to find your entry. Simple as that. Do this every day and trust me, you're going to be successful. You're going to be a profitable trader. So if you find this video helpful, hit the subscription button, and you know, for more educational content like this, it's your boy Walker FX, and see you again in our next video. Peace.